Now we're into September. There's always a bit of a change in September with kids going back to school, people going back to work. Would you still call this a hot market for a fall?
Absolutely. What we are seeing right now is really no change. Um, every month, the Ottawa Real Estate Board gives out their stats. And so when we look back, I can't believe it's September already, but when we look back at the August stats, the fact is that what we saw was something that was quite outstanding. And what we're seeing is Ottawa is standing strong in the Ottawa real estate markets. So if we look at the stats that the Ottawa real estate market gave out, was the fact that we have still a seller's market. And so if we look at that, back in August, over 2,000 homes were sold. In exact, 2,017 homes were sold compared to August last year, which was only 1,725.
Wow.
That's an increase of 17%.
That's a significant jump from 1 month alone. Why is that?
So what we are seeing is just that the numbers are holding strong. You know, as of those numbers, 1,576 of them were residential, which is an increase of 22% back from 2019 of August last year. And so when we look at August last year, 2019 versus 2020, we are seeing a really strong sale price. And so the average price right now to date in the Ottawa market is over $566,000. And so a lot of people are saying, well, you know, what happened? What happened? And what we saw were several things. So the first time we saw more homes come on the market in July and August than usual. People started getting comfortable. It wasn't a lazy, easy summer market. And so we saw more homes come on the market, hence why the surge in sales. Actually, there were 300 more residential homes that came on the market in the city of Ottawa, and 175 more went up than last year. So again, we saw a real bump in the August and July market.
But was it even enough, Colleen, to meet the demand? Because I know the demand out there is huge, and we've talked many times that there isn't enough supply out there, that there's not enough inventory of homes going up. So was that even enough to meet the amount of people looking to buy a house?
It wasn't actually. So what we're seeing happen, and the Ottawa Real Estate Board talks a lot about this, is the fact that the sellers are looking to capitalize on the investment of their home due to the demand. And we're still seeing that multiple offers are still a dominant factor in this marketplace. And you definitely need a realtor to navigate through that. We're also seeing as well that there are record mortgage rates happening, right? So people are capitalizing on that, as well as a decrease in the debt and equity threshold. And so that allows for people to take on homes that they may not have taken on before. But we also have, again, Ottawa being a strong market, migrating buyers from the other cities like Vancouver, Montreal, and especially Toronto are migrating to the city, who are capitalizing on their investment from that previous city. But as you said, Annette, absolutely, we still very much have a pent-up demand of buyers trying to find homes here in the city and even in the outskirts, which we are seeing another trend in people moving out from the city and out to the outskirts and the country areas.
All right, we're going to continue this conversation, and we're going to look into the future, into our crystal ball for what Ottawa and surrounding area looks like in the real estate market in the next couple of months with Colleen. Never mind what's happening with the temperature out there. It's still a hot market for buying and selling a home. And I want to go back to a number that we talked about there a minute ago. The average sale price for residential in this city right now, $566,000. That is huge. That's an increase of 22% over 2019, which is remarkable, Colleen. That's got to be shocking to realtors in the city too.
It is, and yet we fully expected it. You know, when we talk about Ottawa, Ottawa has been so blanketed and protected for so long, and we are just a fabulous city. We should actually be so proud that we are in a city that is so segmented from the rest of the country. We've talked about it a lot on the show, Annette, and let's hone out the voices of Toronto, Vancouver, and Montreal, because Ottawa is a great city. It's a fabulous city. I've lived here my whole life, and the fact is that we are very covered and protected by the outside real estate world. And so, when we talk about real estate in Ottawa, people say, are worried about the real estate future. And I assure you, even though in a seller's market, which is not a market that realtors like, I just want to go on record yet again on that one, the future for Ottawa looks incredible. The fact that we are a growing city and we are, as your producer said, we are getting our sea legs. We are now competing against some of the bigger cities. We don't see any changes anytime soon. We are seeing that this market will stand strong at least for another year. And as I mentioned, it's a very insulated market.
So we're not in a bubble
here.
then,
we have
Colleen.
high tech here, right? So
yeah, we're not in a bubble then, right? Because some people then question, is this going to pop and it's all going to collapse? This is, I know you've used the term before, market correction, if you will.
Yes, because as I mentioned, we, here in Ottawa, we have government, we have high tech, and that alone protects us from the rest of the world, because that's a significant portion. But also we have some great hospitals and stuff and essential workers. And technically, if you look at our numbers, we haven't been hit by COVID as hard as, let's say, Toronto or the Horseshoe because of those industries where we have been able to work from home quite easily. And so what we are seeing is that even though COVID has hit us hard, including realtors, the fact is that we are doing quite strong. And so the biggest thing that we are talking about with our buyers right now is that feel free to move forward in this market. We are encouraging buyers and sellers to say, take some time and build what we call sweat equity. So yes, that number of over 566 growth, that's the average price point right now in the city. So what does that look like for the average buyer? Well, what I'm encouraging our buyers and my team to do, as well as a lot of realtors, is the fact that what we call build your sweat equity. What does that look like? Instead of looking for that postcard perfect home, why don't you do what we call sweat equity? And instead of turnkey and perfect and pretty, we are encouraging people to drop their price a little bit and buy a little bit lower, and be willing to change out flooring, change carpets, even changing a kitchen, which isn't that expensive if you do some of the big box stores, because a lot of times right now, buyers are having what we refer to as buyer burnout, where they are putting in offers, 1, 2, 6, 7 of them, and they are not getting accepted. So go a little bit lower so that you have negotiating movement, and then from there you can build your equity from that. The biggest thing that I encourage any of our viewers, any of the buyers out there, is the fact I don't want you to stretch yourself thin. I want you to be able to go out to dinner and entertain within your bubble. What I encourage you to do is maybe look a little bit lower and make the changes that you want, because I strongly believe that will be time spent really wisely.
All right, if you have any questions for Colleen, stay with us and you can give us a call. .com is the best way to reach her. And she joins us now again to talk about the market that continues to be a hot one here in the region. So we also have some questions coming in. But before I get to those, I just want to talk a little bit more, if we can, Colleen, about the future of our city and the definition of a dream home. Because as you mentioned earlier, before we went to break, we might have to expect to put in a little bit of sweat equity, that maybe accepting a house that isn't completely perfect or completely what you're looking for might actually be a good thing.
Absolutely. And what we are seeing in this market right now is understand that your dream home now is not necessarily your dream home 10 years from now. What's really interesting is the fact that all these people, if you think about it for a second, I actually kind of find it funny. All these people wanted open concept, and now people are regretting it because what we are seeing is we're under COVID and all these people are working from home and there's nowhere to run to
Not
have a
enough
closed
walls.
office. So what we're seeing is builders are actually not doing as many open concepts for the future. But also understand that your home evolves and your family evolves. What I was looking for, my kids, I'm almost an empty nester. My kids now, I want a different kind of concept than what I wanted 10 years ago. And so talk about with your spouse, what are your plans? The key is thinking about 5 to 10 years ahead. Are you having kids, or are the kids moving out? Are they going to university? Also, the fact is that just know the needs that you are and that you want, and that, what your future looks like. I mean, with
Sure.
COVID, everything has turned upside down.
Yeah, and
But
our
the
needs are
fact is
different.
that, for anybody who works in high tech, they know that they sometimes have to work from home. And so you'll need that home office. The key is think ahead, but also know that I want to know that you never are stretching your expenses too thin, because we want you to have those trips when we eventually can take them. We want you to plan properly and think about what your family looks like ahead of the time versus just now. So again, you talked about sweat equity. It might be worth you putting in, your flavor, because as I've mentioned many times, when I work with, and my team works with any of our buyers, the fact is that I don't want you selling every 2 years. I want you to stay in your home at least 5.
All right, Colleen, we've got some questions. Let's get to them. This one coming in from Deb. She's asking, has the demand increased for income properties for triplexes, for example?
Absolutely. I believe in investing in real estate. I'm an investor myself. Most realtors are. And we believe that real estate is a great way to get money in your pocket long term. So the biggest thing that I say to Deb, thanks so much for reaching out, by the way, Deb, you need to just look at how much you're going to invest in. Make sure that you have your 20% down, and then look at your rate of return, or your rate of investment. So your ROI needs to be strong. Yet there are many people who are investing still now, and so absolutely, it's a great time to invest because we believe that the market's only going to go up. So jump in now.
All right, this one's along the same lines. This question coming in from Cindy. With the high prices for houses right now, is it a good time to invest in a rental property?
100%. As we have said, it's one of the safer things. If you think about it, let's say, for example, Cindy, Deb, you invested in a home right now at, I'm going to say just average, $450,000 or $500,000. And even if it never increased, and of course it will, but if you think about it, if you have tenants who are there who are paying off your mortgage and maybe putting a little more money in your pocket every month, but it never, ever increased, which is not true. But if you think about it, they paid off your mortgage. So technically you just made, when you come to sell it, and it's assuming it's mortgage free, you had someone else invest $450,000 in your back pocket. So investing in real estate is something I strongly encourage. It's something that we work with all the time. Happy to talk further about that offline, but it's to me, it's an absolute no-brainer.
All right, Colleen, thank you so much. All the information now heading up to your screen right there for joining us today. If you want to contact Colleen, all the information is right there on your screen.